Corporation, founded in 1916 and headquartered in Denver, Colorado, is the world's largest publicly listed gold producer, with operations spanning North America, South America, Australia, Africa, and Papua New Guinea. Its primary activity is gold mining, which accounts for approximately 88% of its revenue, with copper, silver, zinc, and lead as byproducts contributing the remaining 12%. In 2023, Newmont reported sales of 5.4 million ounces of gold, 70.3 million kilograms of copper, 17 million ounces of silver, 100.7 million kilograms of zinc, and 48.5 million kilograms of lead. The company operates 17 wholly or majority-owned mines and holds interests in 2 joint ventures, notably the Nevada gold mines with Barrick Gold and the Pueblo Viejo mine in the Dominican Republic. Geographically, its revenue distribution is heavily concentrated, with 64.7% from the United Kingdom, 8.3% from South Korea, and smaller contributions from Japan, the Philippines, and other regions. Newmont's operational strategy emphasizes sustainable and responsible mining, aiming to create value while adhering to environmental, social, and governance standards. The company's strengths are rooted in its dominant position in the gold mining industry and its diversified portfolio. Newmont's scale provides economies of scope, enabling cost efficiencies and resilience against market volatility. Its acquisition of Goldcorp in 2019, the Nevada joint venture with Barrick, and the purchase of Newcrest in November 2023 have expanded its reserve base, with approximately 2 decades of gold reserves and significant byproduct reserves as of December 2024. The company's inclusion in the S&P 500 underscores its financial stability and market confidence. In 2025, Newmont stock surged 48% year-to-date, driven by rising gold prices amid macroeconomic uncertainty, reflecting strong investor demand for safe haven assets. Additionally, Newmont's commitment to sustainability, including reduced carbon emissions and community engagement, enhances its appeal to socially conscious investors. The recent promotion of Natasha Viljoen to President and Chief Operating Officer signals robust leadership continuity, further bolstering investor confidence. Despite these strengths, Newmont faces notable challenges. A projected 14% decline in gold production for 2025, following the divestiture of 6 higher-cost, smaller mines, poses a risk to revenue growth. This strategic portfolio optimization, while aimed at improving efficiency, introduces uncertainty regarding future output and cost structures. The mining industry's exposure to commodity price volatility remains a concern, as gold prices, currently above $3,360 per ounce, could fluctuate due to geopolitical developments or shifts in monetary policy. Newmont's reliance on international markets, particularly the United Kingdom, exposes it to foreign exchange risks and supply chain disruptions, as evidenced by uncertainties stemming from Russia's invasion of Ukraine, despite Newmont's lack of operations in that region. Furthermore, operational risks such as labor disputes, regulatory changes in host countries, and environmental compliance costs could strain profitability. The company's high capital expenditures, driven by significant stripping campaigns at open-pit mines, also pressure cash flows, potentially limiting dividend sustainability. Key financial figures provide insight into Newmont's performance. In the first quarter of 2025, Newmont reported robust earnings, reflecting the success of its portfolio optimization efforts. The average analyst rating from 12 sources is a buy, with a 12-month stock price forecast of $55.9, suggesting a 10.08% upside from its April 2025 price. The company's market capitalization is substantial, befitting its status as the largest gold miner. Its return on assets, ROA, and current ratio demonstrate financial health, though specific values vary across reporting periods. However, leverage ratios, such as debt-to-asset ratios, warrant monitoring due to the capital-intensive nature of mining. Newmont's dividend policy, while attractive, remains subject to board discretion, with future payouts dependent on commodity prices, financial results, and liquidity needs. The company's share repurchase program, authorized but not obligatory, adds flexibility but also uncertainty for investors seeking consistent returns. The motivations of Newmont's auditors, typically a Big Four firms such as Ernst & Young or PwC, are critical to understanding the reliability of its financial reporting. Auditors aim to ensure compliance with generally accepted accounting principles, GAAP, and International Financial Reporting Standards, IFRS, verifying the accuracy of Newmont's financial statements. Their primary motivation is to provide an independent, objective assessment of the company's financial health, protecting stakeholders from misstatements or fraud. Auditors scrutinize revenue recognition, given the complexity of commodity sales contracts, and assess the valuation of mineral reserves, which involves significant estimates. They also evaluate environmental liabilities, a material concern in mining due to reclamation costs. However, auditors face pressure to maintain client relationships, raising questions about their independence. Could subtle biases influence their judgment? Are they adequately addressing the risks of over-optimistic reserve valuations? These questions underscore the need for rigorous audit oversight to maintain investor trust. In conclusion, Newmont Corporation remains a formidable player in the global mining industry with a strong market position, diversified operations, and a commitment to sustainability. However, challenges such as production declines, commodity price volatility, and operational risks necessitate cautious optimism. Investors must weigh these factors against Newmont's robust financial performance and strategic initiatives. What will drive Newmont's long-term growth, sustained gold prices, or operational efficiencies? Can the company balance profitability with its sustainability goals? These questions invite further scrutiny. I encourage you to engage with this analysis by liking and subscribing to stay informed on future insights into Newmont and the broader market. Thank you for your attention.